Okay, so today we're jumping into a really fascinating technical report on Kezar Life Sciences. Now, this is a clinical stage biotech company, and their stock has just gone on an absolutely explosive run. We're going to get into the charts, get into the data, and really try to understand what is going on here. So, let's dive right in.
Right off the bat, the biggest number from this report is just wow, a 77% surge in Kezar's stock price. I mean, that's the kind of move that makes everyone stop and pay attention. But for an investor, what does a jump like that actually mean? And get this, it happened in just 2 weeks. So in this breakdown, we're going to unpack the two kind of conflicting stories this report tells. On one hand, you have this incredible momentum pushing the stock up, and on the other, you have these huge warning signs that it might be getting dangerously overheated.
So you know what? Let's just start at the end. What is the report's final recommendation? Because this is where things get really interesting.
And there it is. The report is basically saying two opposite things at the same time. In the very short term, it's flashing this big warning sign. The stock is extremely overbought, and you should probably think about selling some. But if you look out just a little bit further, the outlook is bullish, with a potential price target of $10. So how can both of those things be true? Well, to get that, we have to look at the data behind each call.
First, let's look at the bullish case. What are the powerful forces that sent this stock into orbit in the first place?
Just take a look at the scale on this chart. It's wild. For months, the average daily trading volume was hovering around 50,000 shares. Then, on October 17th, bam! It exploded to nearly 6 million. That's a 100 times increase. This is not just a little bit of interest. This is a tidal wave of attention and money flooding into this one stock.
So this massive surge in volume and price, it's all driven by a concept called momentum, and that's a key idea in this report. The best way to think about it is not just how fast the price is going up, but how fast that climb is accelerating. Kezar's stock isn't just speeding up, it's like it's slamming the gas pedal to the floor.
And this table right here, it just shows you how powerful that acceleration is. I mean, look at it. Across every single time frame, from the last 5 days to the last 200, the current price is way above its average. Check out that 50-day number. It's trading over 54% higher than its recent average. For an analyst, this is a crystal clear signal of an incredibly strong bullish trend.
But all that incredible strength, it brings its own set of risks. So let's flip to the other side of the report and see why there's also a serious case for caution here.
And this is the million-dollar question the report poses. Whenever something shoots up this fast, you absolutely have to ask, has it gone too far, too soon?
And that leads us to the key warning in the report. The stock is overbought. Honestly, the analogy of a stretched rubber band is perfect. You can keep stretching it and stretching it, but the further you pull, the more tension builds up and the higher the chance it just snaps back violently. And that snapback is what traders call a correction or a pullback.
And this isn't just some gut feeling. The data is practically screaming it. The report points to 4 key indicators, all flashing bright red. Take the Relative Strength Index, or RSI. It's at 84. Now, for context, anything over 70 is already considered a warning sign. 84 is extreme. Another tool, Bollinger Bands, shows the stock is trading way outside of its normal range. All of these different mathematical tools are pointing to the exact same conclusion. That rubber band is stretched dangerously tight.
Okay, so we have this super powerful uptrend colliding head-on with these extreme overbought signals. How do you even make sense of that? What does the report say is the path forward?
So how does the report solve this conflict? It actually lays out a pretty clear 3-step strategy. Step 1, brace yourself for a pullback. A drop of 10 to 20% should not be a surprise after a run like this. Step 2, if you believe in that longer-term bullish story, the advice is to hold your main position through that dip. And step 3, and this is so important, is to manage your risk. Have a clear exit plan at the $4.44 level.
This table basically gives you all those crucial price levels in one spot. Think of it like a roadmap. The report sees 563 as a potential floor if the stock pulls back. To keep climbing, it needs to break through that ceiling at 644. And most important of all is that 444 stop level. That's your emergency exit, the line in the sand to protect yourself if the whole bullish story starts to fall apart.
So, after we've broken down all the charts, all the indicators, we are left with one final, and I think really fascinating question. This whole report is based on technical analysis. It's the story the numbers and charts are telling us. But with a company like Kezar, whose value is ultimately tied to things like clinical trials and scientific breakthroughs, does the chart matter more than what's happening in the lab? That's really the core tension here, and it's something worth thinking about long after these specific charts have changed.